Hi, this is Ian Coleman from PIA First. This is this week's video analysis for the FX Majors week 28th of May 2018. As always, we're going to break down the currency pairs starting with the dollar index and also breaking down timeframes to highlight what formations we're seeing this week and also what levels we're looking to forecast or use as support or resistance. The first chart is the dollar index monthly chart. Here we can see that since the lows of 2008 we've been in a bullish channel formation. We've broken the Ishimoku cloud to the upside. There's no clear indication that this rally is coming to an end in this time frame. If we go to the daily chart, here we can see that we've had a 5-wave Elliott wave complete around about 88.21. We then had a period of consolidation, and then we've had this impulse move to the upside. Now, there's no clear indication that the rally is coming to an end. Obviously, with a 261.8% extension level located at 95.21, and that being extremely close to the previous swing high at 95.15, this is going to be our first focus going into this week. However, we don't think that the dollar rally is going to stop there, and we actually believe that 96, the figure, is going to be the main target for the dollar index in the weeks ahead. So 96, the figure, is the trend of lower lows. It's also a 50% pullback level of this decline, and also quite an important factor is that we had a flip in this week, which was the week 16th of April, and it's a bullish outside bar. Normally we count these rallies up to 9 bars. At the moment we've got 1, 2, 3, 4, 5, 6. So even if we do see a dip lower from around about 95, the figure, we're expecting any sort of pullbacks to be mild and limited, and then to move higher towards 96, the figure. So if we reflect that dollar bias back onto the currency pairs, so we're looking at over a medium-term bias anyway on buying dollar dips, so we should be looking at selling euro dollar rallies. So again, breaking down the time frames, monthly chart, levels near the 38.2% pullback level at 125.22 found sellers. There's no clear indication that this sell-off is coming to an end in this time frame. We've got a swing low from November of last year located at 115.54. Weekly chart. Here we can see we've had a wedge breakout. The actual target level for the wedge breakout is down here at 106.55. Now we don't know if we're going to get such a sustained sell-off. This is the previous swing low that we mentioned, and then we've got a 261.8% extension level at 114.90. The only formation or time frame that highlights caution going into this week is the 4-hour chart, and here we can see the potential. We've got to say potential because it's only validated when it actually breaks the upside. So we've got a potential of a ending wedge formation. So we would need to see, let's just move this lower, we'd need to see a break of 117.28. If we saw a break of 117.28, then normally the target level for the breakout is the start of the wedge, which actually comes in at 119.95. Now, if that did occur, and we don't think it's going to, but that would indicate probably an end to that dollar rally, or at least a sustained pullback. But like we're saying, we're not really expecting this breakout to happen. We've got bespoke resistance going into early next week at 117.02, and then if we break that level, we've got bespoke resistance at 117.83. So these are the two sort of resistance zones that we're looking at, and obviously monitoring the potential breakout of the wedge formation. Cable, similar story really to euro dollar. Bearish outside bar posted on the monthly chart. We've actually got a flip as well on the monthly chart, so we are expecting a sustained move to the downside. We've got reverse trendline support coming in at 128.57, and that's quite important for this analytical outlook. Weekly chart, we've broken the channel formation to the downside. Now, we mentioned that 128.57 level. That's because it's close to this pullback level here, which is the 61.8% pullback level at 128.48. So this is our long-term target in sterling dollar. There is scope for a mild correction going into next week, and similar to euro dollar, we have formed a ending wedge formation. 132.71 is the trend line support, which we're obviously going to monitor early next week, but resistance levels coming at 133.51 and then up here at 134.43. It should also be noted that there was a DMARC 13 count on the daily chart. Now, that often indicates the end of a trend. However, the projected stop level was at 133.01, and as you can see, that was taken out on Friday, so that's invalidated that 13 count. So we are expecting sterling dollar to continue the move to the downside, and we're obviously monitoring these resistance levels for potential flips off resistance. Dollar Swiss, here we can see on the monthly chart that we got this breakout to the upside. We then stalled and reversed close to a previous swing high. We've got bespoke support at 99.06, and we've got this reverse trend line at 98.94. At the moment, it doesn't look like that level is going to hold. If we break down to a weekly chart, we can see a 13 count also here that has held. We've got reverse trendline support coming in at 98.32, and the reason we've highlighted that is because if we then go to the daily chart, we've got potential for a reverse head and shoulders. So 98.32 is here. We've got bespoke support at 98, the figure, and then we've got trendline support at 97.53, which is also close to a 38.2% pullback level. Normally, when we get very impulsive moves to the upside, the corrections are mild and limited. So between 23.6 and 38.2 is sort of a prime support area. At the moment, there's no clear indication that this correction to the downside has come to an end. 99.55 is bespoke resistance going into next week. So really the intraday bias is to sell into rallies. The long-term bias is still to buy into dips. Dollar yen, quite an interesting week, I think, for dollar yen. If we just break down the time frames, monthly chart, we're in a very large bullish head and shoulders formation. Needs to have a break here at 127.50 odd to confirm that this formation has played out. Obviously, we don't trade off monthly charts, but we do look to them to give us a bias. If we broke this low, then there is potential for a move down towards the 61.8% extension level. But the fact that this 50% pullback level has held, I think that the main bias is still to the upside. If we go to the weekly chart, we can see channel formation. We've got trendline resistance around about 112.37. This is important for last week. We've posted a bearish outside candle, often an indication of the end of a trend or at least a correction to the downside. And the reason why I say at least a correction to the downside will be explained on these shorter time frames. Now, here on the daily chart, 261.8% extension level, 110.87. We spiked through that. We've since seen a move lower, and the reason that I've highlighted this level here is because this is now our bespoke resistance at 109.90. It's also a previous swing high, and I'm just going to put a channel on here to also highlight sort of scope for downside corrections. So to the downside as well, we've actually got some support. Let's just get my other charts up. 108.79. So at 108.79 we've got some support, and that's also 38.2%. So this move lower could well bounce off this level, 108.72. It's hard to call a medium-term trade off it, but intraday we're probably looking about at taking longs here and then selling into the rally here to take us in a bigger correction down. So in other words, this being the impulse wave, this being AB, this being CD, and then this being, this being A to B, this being B to C, and then this being CD to the downside. And that's better explained actually on the 8-hour chart. So 108, as we said, at 108.79 being support, a bounce off here, potentially moving up to what is now resistance, and then making this head and shoulders formation for a bigger correction to the downside. So the bias for dollar yen at the moment is really intraday, like I said, to buy dips, but then medium term to sell into rallies for a bigger move lower. And obviously it's one that we're really going to monitor very closely on Monday and Tuesday of next week. Dollar CAD, hard to really, we've been trying to get long of dollar CAD, and every time we're sort of placing dip buying levels, we're just missing them, which is quite frustrating. We've got a large wedge formation. We've got some trendline resistance at 130.83. Be pretty unwise to buy dollar CAD at the market at the moment. Short-term dips are seen 128.10 and then 128.55. And again, this was an impulse move to the upside, corrective move downwards. A period of consolidation, got a swing high here, so there is scope that we might move back down into this congestion area at the beginning of next week to then be able to get long of this currency pair. Aussie dollar, which time frame should we start at? The monthly is a large expanding wedge formation, a very long period of consolidation, expecting it to eventually break to the downside. We've obviously got some support coming in around about 71.70. The weekly chart, and here D-marks played out quite well again. We've got a 13 count on the weekly chart, near a 161.8% extension level, and it saw this correction to the upside. So as we previously mentioned, sometimes it's a correction, sometimes it's a reversal. We've got some reverse trendline resistance at 76.64, which we highlighted last week, which was our prime level to get short of Aussie dollar, but we didn't reach those levels. If we go to the daily chart, this was our resistance level. Sorry, this is now our resistance level, coming in at 76.24. This move has been mixed and volatile, which says that it is a corrective formation. We've got a bearish engulfing candle from Friday, which really highlights that we should break lower. However, we're very cautious because, again, we've got one of these 12 counts. So we've only got, on Monday, we're likely to get a 13 count in Aussie dollar. And we don't like to sell into 13 counts. We prefer to sell rallies higher. And the intraday chart is actually showing an ending wedge breakout. Now, again, the target level for a wedge breakout is here, around about sort of 74.60. The actual target level is, what is the low trade? 74.47. But this could be leg one of a 3-leg correction. So we're now coming down in leg 2, or AB, BC, CD up towards that 76.24. So at the moment we're going to hold off selling Aussie dollar for the next drive lower, and we're going to see if we can we can just get another corrective rally up to that 76.24 level. Probably one of the hardest currency or major currency pairs to analyze at the moment is euro sterling. Intraday it's very mixed, very choppy. I do think that the long-term bias is still to the downside. We've got sort of trend line support from a wedge formation located at 86.60. If we look to the weekly chart, it highlights that, you know, for quite a prolonged period of time now, trading has been mixed and volatile. This I think is quite important. We've got a bespoke support at 83.15. That's close to the 161.8% extension level at 83.02, and this is obviously previous support. So long term, we'd like to get down to this level. Short term is finding ever more difficult. And in fact, here we saw a impulse move to the downside, corrective channel, hit the 61.8% extension level, move down. This should have been an impulse move to the downside, and it's not been. And in fact, for the last 3 days of the week, you can see that all we've done is move around our bespoke level at 87.60. So rallies have been sold and dips been bought. It's really hard to really predict where we're going with this pair at the moment. I still would like to sell into rallies. Obviously here would be prime, but we also can't rule out a larger corrective formation to the upside with this level, sort of 89, the figure being a prime area to get short. So at the moment, we're not making a medium-term call in euro sterling, and actually would prefer to sell into rallies, and we'll see basically how the currency cross plays out. Euro yen was one of our prime plays, if you like. It's technically, from a technical analyst point of view, it did everything it should have done. Bearish outside month in February, Marubozu level held, which is 132.76. That's the midpoint from the open and the close, and then we've seen a break of the low. We've actually got two inside soldiers, if you like, on the monthly chart. If we go to the weekly chart, here we can see an impulse move to the downside. Bespoke resistance is located at 129.19. I don't think we're going to get back up towards that sort of level. We broke the previous swing low at 127.56. Bespoke support this week comes in at 124.75. If we go to the daily chart, then we're just highlighting resistance levels basically, because we do expect pullbacks to be mild and limited going into this week. So 128.25 is our first resistance level, and then if we break there, and I don't think we do, then obviously the prime short area is here, which is 129.40, and we've got bespoke resistance at 129.60, and that would be a retest of the channel breakout or the trend of higher lows. Okay, I hope you found that educational and hopefully profitable for you guys going into next week. We'll obviously be posting an intraday trade idea or a medium-term trade idea again on Wednesday. Okay, thanks very much, and the best of luck for this week.